Good morning, everybody. Um, Actually, I tried to post this as a Facebook Live video earlier, and we had a lot of issues. So we're going to post it on YouTube and see how this goes. Hopefully, we don't have that same kind of lag issue here, considering it's not a live stream. So right now, they are voting on the GOP tax plan for 2017 taxes. We should have results in the next, I don't know, hour or so. They may actually already be done by the time I'm posting this video. And I'll update as soon as I know this. But this information should still be into play, should still be true even once they finish it. Uh, Basically, this video is going to be on how the Donald Trump tax plan impacts your 2017 tax return. Just a quick disclaimer: we're focusing only on the changes to personal tax returns. We're not going to go into corporate taxes. There's so much there to learn when it comes to corporate taxes, and this video will not reflect pretty much anything about that. So you can visit our website at refundschedule.com/Trump Tax Plan 2018 or see any links below. We will try to get those up as fast as possible. This information is not official yet. It is based on current legislature, but the legislature should actually be official as of today, and we'll try to update the description below as soon as we know anything official or if anything changes. And if this information becomes not true, we will definitely post another updated video giving all the correct information. There are currently two plans, the Senate and the House plan. These have both been approved by the Senate and the House, and they're voting on an amended plan right now that will encompass the majority of these same things. Both the Senate and the House plan are different, but very similar. Very similar. Uh, these are the changes that are affected in both plans. Both plans cut your income tax rate, as in cut the percentage you pay based on your taxable income. They double the standard deduction, meaning the amount that goes against your income, and they eliminate the personal exemption, which is how much you get for yourself, your wife, your husband, your children. They eliminate that, so you will not get that guaranteed amount based on dependents and based on people on the tax return. Here's the current Senate tax bracket versus uh, the planned tax bracket under the Senate. It's pretty much very similar until after you get to around the 12% mark. You'll see that those making slightly less than 40,000 will only have to pay 12% versus 15%, and those in married filing jointly will make this amount. We do have this on the website, so if you need to look at it and compare it to your own, we don't want to go into it just because there's so many different amounts that people could have. But basically, if you made $38,000, you would pay 12% under the new law versus currently 15%. So there would be a slight difference in amount. And this is the House, the simplified plan. The biggest changes here are it's much easier to read under the House versus the current. So basically, if you made, we'll just pick $50,000, you would pay 25% taxes versus 20 in between 25 and 28, depending on exact amount. It's easier to read, and it is slightly lower in most circumstances. They are removing the itemized deductions, which is a big thing that a lot of us have dealt with. You know, you break out everything you have and you write off every single receipt instead of using the standard deduction, which is a guaranteed amount based on whether you're married or you're single and your dependents, etc. But this would eliminate most itemized deductions. The only ones that it would not eliminate are the charitable contributions, mortgage insurance, property taxes, and retirement savings. Current mortgage holders should not be affected by either plan, so would be grandfathered in if you have a current mortgage. Mortgage interest deduction, the House plan limits the amount to $500,000 for new mortgages, and the Senate keeps it at $1 million. So you'd be able to write off your interest if you had a payment if you purchased a home up to $500,000 under the Senate and up to up to $1 million under the Senate and up to $500,000 on the House plan. It doesn't impact the majority of people. Medical expenses deduction. This eliminates the deductions for medical expenses. The House removes it and the Senate keeps it. Most likely it will be kept in, but we'll go over both circumstances. Uh, there's a good chance that you used to be able to write up to 10% or more of your income if you had a large amount of medical expenses. This would remove it, so 8.8 million people used deduction in 2015. They would be without it in 2017. They would be removing the Obamacare tax that you get at the end of the year for not having health insurance. This would save 338 billion for the subsidies that the federal government pays, but once again, it would leave many without health insurance, which would drastically drive up the cost of health insurance premium for everyone. You'll no longer be able to write off state and local taxes. So, for instance, those who have, if you paid taxes in the prior year for state or local, you were actually able to write them off federally. You'll no longer be able to do that. The House plan does allow you to deduct state property taxes up to $2,000. There are other deductions that are gone basically. Both plans eliminate deductions for interest payments on school loans, moving expenses, theft or loss of valuables, and electric vehicles. This is a big deal because a lot of people do write off their student loan interest, and that would no longer be there. Okay, here's a big thing: the standard deduction. Both plans are raising the standard deduction for single filers from 6,350 to 12,000, and for married filing jointly to 12,000 to 24,000. That's a big deal. That is money that goes straight against your income to decide how much you owe in taxes, basically. They are removing personal exemptions, which is a big hit on families that have more than one child, because anyone that has more than one child would immediately end up owing more in taxes. They would get less money to go against their income, so they would have a higher taxable income. So, for instance, a typical deduction for a four-person family is $28,900. Under the new plan, it would be $24,000, which would mean you'd owe almost $5,000 more in taxable income, which could be a large amount based on how much income you have. The child tax credit is going to go up from $1,000 to $2,000 in the Senate plan and $1,000 to $1,600 in the House plan. We do estimate the Senate plan does get passed because they are working on simplifying the tax code, which is a much needed thing because it's very overcomplicated. Even as an accountant, I would prefer it to be much more simplified so it's easier to explain to people. Both plans preserve the adoption tax credit, and the House plan allows a $300 credit for each non-child dependent, which is great. So those who claim non-child dependents, they would get $300 bonus, basically. What else is in the plan? So many things are in the plan, but we are focusing on the personal changes. And so if you'd like to see the full tax plan, visit our website, refundschedule.com/Trump tax plan 2018. I did kind of rush this video out just to get some information out to you guys, and if anything does change, I will update the comments, and I'll always update our Facebook page. Should see some links up here for you guys. Thank you so much for watching. If you have any questions, please put them in the comments, and I'll try my best to go over them. Thank you. Goodbye.